Imagine writing off thousands of dollars by simply using your car for a business, or writing off a huge chunk of a new vehicle that you're planning on purchasing, maybe even this year. Well, as a licensed CPA at mycpacoach.com, I have successfully helped hundreds of people legally write off their vehicles, and today I'm going to show you the exact steps to actually accomplish this. Plus, there are some new tax code changes that you need to know for 2025 and rumors of what's to come, so just stick around for this full video for all the details. Okay, so let's talk about the car you want to write off. Is it the new Escalade, Range Rover, Mercedes, G-Wagon, Jeep, Porsche, Tesla, Ferrari, or Lamborghini? Or maybe it's not a luxury vehicle, but a man can dream, right? Anyway, the first logical question people have is, well, can I write off a car to reduce my taxes? And the answer is very simple. Yes, if you use your car for a business. It's that simple. This is not illegal. The tax law is very clear that if you use your car for business purposes, you can deduct it. Does not matter if the vehicle is in your business name or in your personal name. If you use a portion of that vehicle for your business, you can write off a portion of that vehicle on your taxes. For example, if you use the car 100% of the time for your business, then you can generally deduct 100% of expenses tied to it. If you use the car only 50% of the time for your business, then you can deduct 50% of the cost and so on. So then if you want to write off a car, you need to find a way to use that car for your business. And this is where tax strategy comes into play, because if you don't have a plan to actually use your car for a business, then you cannot take this deduction. But if you simply create a plan to use the car for a business and actually do use it, then you can qualify for vehicle tax write-offs. So let's break this down. How exactly can you use a car for business purposes? Well, in short, the use of your car should help you conduct your business or trade in some way. Ideally, you are using it in the pursuit of income. This may include traveling to meet with clients, vendors, customers, or even your own employees and business partners. It may include traveling between multiple business locations. Maybe you have multiple offices, work sites, rental properties, storage units, warehouses, and so on. Well, the travel to get to and from those locations typically would qualify as business travel. It may even include travel to pick up office supplies, tools, equipment, inventory, and other materials you need for your business. Or if you have an e-commerce business, it may include travel to and from the post office, for example, or to simply run business errands. There are so many examples that may warrant you using a car for business travel, from attending business events and conferences to traveling to job sites and so much more. But the bottom line here is that you must use your car for business travel, which is typically defined as traveling from one business location to another business location. For example, if you travel from your business office to a restaurant to meet with a business contact, that will be traveling from one business location, your office, to another business location, the restaurant. In this scenario, the business expense associated with your car in miles driven would typically qualify for the vehicle tax deduction. And all of the previous examples we just mentioned had this in common. We traveled from one business location to another one. And this is what the IRS will be looking for if they question your vehicle tax deduction, which is why it is so important to keep some type of mileage log that keeps track of this for you. And there are actually some mobile applications that will automatically track this for you. And I'll provide the link to one of my favorite ones to use in the description below. But in general, if you use your car for business travel and in the pursuit of income, you will likely qualify to take vehicle tax deductions. But how you actually write off your car is even more important, especially this year, because there are some big changes. So let's break down the best ways to write off your vehicle as of this year. So the IRS gives us multiple ways to write off a vehicle. And I always tell my clients, whenever the IRS gives you multiple ways to calculate something, you better believe that one of those ways will save you more money in taxes than the other one. So it is very important that we get this right. So let's talk about this in very simple terms, okay? On the absolute highest level, there are two ways to write off your car under your business: the standard mileage method and the actual expense method. Or in other words, your deduction will be based on the business miles that you actually drove or the actual business expenses you incurred to operate that vehicle. So let's start with the easiest method: business miles. The mileage method gives you a specific deduction per business mile that you drive. And in 2025, the rate is 70 cents per mile. So if you drove 10,000 business miles, you would have a $7,000 vehicle tax deduction. And that's it. It's very simple and straightforward. But this simple and straightforward method may not save you the most amount of money in taxes. So let's turn our attention to the actual expense method. Now, the actual expense method allows you to write off your actual car expenses like gas, oil, repairs, insurance, license fees, registration fees, and our favorite, depreciation. And the amount of those expenses you can write off depends on the business usage of that vehicle. For instance, if you had $20,000 in car expenses for the year and use the car 90% of the time for business purposes, you will be able to write off $18,000 of those expenses from your taxes. But if you only use the vehicle 50% of the time for your business, then you would only be entitled to a $10,000 deduction with the same amount of expenses here. So for our clients, we usually tally up all of their car expenses to determine which one of these methods will save them the most amount of money in taxes. And due to the rising cost of cars, car insurance, gas, and so on, we generally see the actual expense method being more beneficial, especially when factoring in bonus depreciation, which many people miss out on. So let's take a second here and talk about the largest vehicle tax deduction under this method, depreciation. Now, depreciation simply refers to the loss of value of an asset, and cars are depreciating assets, right? So the IRS allows you to take depreciation as a deduction for tax purposes. In very simple terms, this allows you to write off a portion of your vehicle's purchase price each year until it is fully expensed. For example, the IRS generally allows you to depreciate a vehicle evenly over 5 years. So someone who buys a $50,000 vehicle may be able to write off $10,000 of depreciation over a 5-year period. And that's if you just use the regular method of depreciation. But the IRS also gives us multiple ways to take depreciation. There's straight line, double declining balance, bonus depreciation, section 179, and so on. And like I mentioned to you earlier, whenever the IRS gives you multiple options to calculate one thing, one of those options will save you more money in taxes than the others. So let's quickly go over the depreciation methods available to you. Now, the simplest method is straight line depreciation, which simply depreciates the cost of your car evenly over each year, which we just covered. Then there's declining balance depreciation, which allows you to take more depreciation in earlier years to get a greater deduction today. For example, if you use 200% declining balance depreciation on the same vehicle, you will be able to deduct $20,000 in the first year instead of $10,000, assuming the IRS limits allowed you to do so. But then on top of that, you may even be able to take more deductions here with bonus depreciation. This is an additional depreciation deduction that you may be able to take, often saving people thousands more in taxes alone. So in 2025, the bonus depreciation rate is 40%, which means that on that $50,000 qualifying vehicle, you may be granted an additional $20,000 deduction here. However, this deduction may be limited if you exceed the annual depreciation limits. If you are writing off a passenger vehicle that weighs less than 6,000 pounds, then your deduction may be limited to IRS annual depreciation limits. But if your vehicle weighs more than 6,000 pounds, then it may not qualify as a passenger vehicle, which is key because it means that those depreciation limits would not apply anymore. This is why we saw so many influencers purchasing things like G-Wagons, Range Rovers, Model X's, and other heavy vehicles over the past few years. It's because those purchases granted them with larger tax benefits. Bonus depreciation is currently phasing out, but the rate used to be as high as 100%, whereas it is 40% in 2025 and is set to be 20% next year. But this may change in the future once the Trump administration passes their tax bill. But as it stands right now, this tax provision is phasing out and expiring as we speak. So from a tax perspective, someone looking to write off a vehicle would likely save more money in taxes this year than they would from buying the same exact vehicle next year due to bonus depreciation if they plan to use it anyway. So let's run through this just to make sure you understand. Can you write off a vehicle? Yes, you can if you use that vehicle for your business. And how do you use it for your business? You must conduct business travel in the pursuit of income. And how do you write it off if you meet that criteria? By using either the standard mileage method to write off your business miles or the actual expense method to write off your actual expenses. And if you use the actual expense method, make sure you choose the best method to depreciate your vehicle, from straight line and double declining balance to bonus depreciation. Guys, if you understand these concepts, you can save thousands of dollars in taxes. But honestly, many tax professionals don't even understand these rules, if I'm being honest with you. So if you need help with this and putting an all-encompassing tax plan together that guarantees to put money back into your pockets, just head to mycpacoach.com to get a free consultation with my team today.